Good morning, Bookmap community. My name is Charles. I come from a group called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. This morning, I want to take some time to talk about the ES and what we might be expecting in the days ahead. Little business we got to get out of the way first things first. It is always very confusing when we have contract rollovers. Everybody has different opinions about how you should roll over your contract, when you should roll over your contract. If you are new to futures trading, every quarter, so 4 times a year, we switch to a new contract. The contract is shown by different letters. So we have been trading on the H contract, and we are about to start trading on the M contract, okay? And the way that this works is that you have basically a week to roll over. If you look at the dates here, the official roll date is today, and then the expiration of the old contract is Friday. Okay, so you can roll over any time between now and Friday. There is no right or wrong time to do it. It doesn't matter, okay? I assure you that you don't trade enough liquidity that it matters which of these two contracts you're on. You could easily get a fill of 100 contracts on either one of these, and you'd have no problem, okay? So I always roll over on the actual rollover date, on the first day of the rollover, which is today. The reason I do that is because the continuous contract that I trade with my market profile chart automatically rolls over on the first day. So the markets are going to move together. If one of the contracts goes up a tick, the other contract will go up a tick. You don't need to worry about that. They will move in sync with each other, but the price levels will be slightly different. So the current price level on the H contract is at 56.36, but the current price level on the M contract is 56.89. So again, they will both move up tick for tick and down exactly in sync with each other, but the price levels are different. And sometimes this can cause a lot of confusion. So since my chart automatically rolls over on the first day, I will trade the new contract. So today I will be trading the M contract. For that reason, I will be referring to everything in terms of the M contract. I will not be referring to things in terms of the old contract. Now, you may see me on Bookmap. You may see me switch back and forth between the M contract and the H contract a couple of times because the liquidity isn't fully rolled over. So again, if we just look at CME's website, we can see that there is more liquidity now in the older contract than the newer one. So until that has completely rolled over, if you're looking at order flow, you kind of got to keep an eye on both. You got to keep an eye on both charts because, you know, the contracts will be adding and removing from both charts. I would say by tomorrow, a majority of the liquidity will be in the new contract in the M, and so I won't need to look at the H anymore. But today, when I'm looking at Bookmap, I will be switching between the two. So that is the literal how I'm going to be looking at things. The next question is, how do you look at things in terms of trading them, right? If you have a certain system that you use for trading the market, how do you look at things? Again, it is my system that I just treat the new contract as if it's the old contract. So I will use all the old levels in terms of levels that I'm watching for support or resistance, as in terms of what I call a certain high or a certain low. I will use the old contract's number, and I will treat the new contract as if it is the old. So technically right now, if you're still trading the H contract, you're still inside yesterday's range. You're still inside Friday's range. That increases the odds of chop and sideways and grind. It is not bullish to open inside the previous day's range. But if you're trading the M contract the way that I do, you have a massive gap up this morning. And so that's bullish, and that tells you the market is likely to go higher. First, it's likely to try to fill the gap, which will lead to chop and sideways and grind. So it's still the same behavior in terms of what the market will do, but the outcome is different, right? The outcome is more likely continuation to the upside. I might be wrong, right? The market might open and we come right back down on the new contract, come right back down into the range from last week and go nowhere for a couple of days. That's fine. Okay. I have traded these contract rollovers. I have tried everything there is to master this. And the long and the short of it is this system is what works best most of the time. So I'm on the new contract and I will treat it as if it is the old contract in terms of price levels. So as far as I am reading things this morning, we are opening with a gap up, even though technically we are not. I am going to treat it like a gap up. I am going to think about it like a gap up. I'm going to be looking for support at Friday's high based on the old contract levels. And that's just the way I do it. If you find that confusing or you disagree with me, that is totally fine. But this is just how I do it, and it's what works best for me. Okay? So taking all of that into account, where am I at? What do I think the market is going to do? Well, I am bullish this morning that the market wants to try to go higher. Why? Because we have a gap up. Okay? The market had a spike up, not technically a spike, but tried to have a spike up at the end of the day yesterday. That was a little bit bullish to see. It slightly increased the odds that the market was going to go higher this week. And so seeing now that we're opening with a gap up, again, I know it's the new contract and blah, 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 but I'm treating it as a gap. Opening with a gap up tells me that we have momentum. Okay. So if the market opens and it just starts to go straight down, let me get my drawing tool up here. Then I will know I'm wrong. I will know that we are balancing and I will look for support and resistance and I will trade it as balance. But until we get back below 56.49, in the new contract, in the M contract, I am going to assume that this market wants to go higher. Okay. We had a lot of momentum down. A lot. I'm actually going to switch to the daily candles for this. Come on. I don't know what's going on with this app. There we go. Okay. Sorry, guys. Technical difficulties. Okay. So we had a lot of momentum down over the last few weeks. There's two ways you can balance off momentum. Price can't just go straight in one direction forever. It has to cool off from time to time. One way is you can go sideways and you can balance using time. And you basically go sideways as long as you need to, and then you either continue lower or you reverse and come back up. Okay. The other way you can balance off momentum is with price. You bounce with price and then you get rejected down later and you continue the momentum lower. I believe that we are doing the bounce with price is what I think is happening. Now, again, things will change very quickly. If this morning we open and we start going straight down, I will be wrong on this analysis. But that's what I think is happening. I think we are trying to get a bounce with price, likely to look for a trend line from the highs so that the market can start selling off. I have been well spoken on the fact that I believe that we are in a full-on bear market. I think that the ES is going to go to a 20% drawdown. So the lows was about 10%. I think that's about halfway where we're going to go. I think we're going to go much, much lower. But that doesn't mean I think we're going to do it in a straight line. So to me, getting a bounce over the next few days into resistance would make a lot of sense to then turn around and head lower. So very, very short term, I'm bullish, but bigger picture, I still think this market is going to go much further to the downside. Okay. So now let's start getting into some levels where we can look to understand what is the market doing. So for the sake of this conversation, I'm going to call the overnight high. Again, I'm on the new contract. I'm going to call the overnight high 57.04, and I'm going to call the overnight low 56.52. Okay, that's my overnight range. As long as we're in between those two levels, I expect chop. I expect the market to go up and down and up and down and up and down and drive as many traders mad as they possibly can. Okay. If the market is able to get above what is the overnight high, then I will be bullish for continuation to the upside. If the market gets back down to yesterday's high, again, this is the old contract high at 56.49, and it finds support there, I will be bullish for it to turn around and head back up towards the overnight high. Only if it gets back inside yesterday's range by the old contract will I begin to get bearish for a larger pullback. Okay. The long and the short of it is, during rollover weeks, it is always tricky, particularly tricky to pick exact support or resistance levels because everybody's looking at something different. Some people are looking at the old contract. Some people are looking at the new contract. Some people have software that combines the two together in some sort of funky way. So everybody's going to have slightly different levels where they are looking to enter trades. That just means, I would say today through Wednesday, I got to be a little more cautious. Okay. I got to feel really confident to enter trades. I got to recognize that my support and resistance levels won't necessarily hold perfectly, but what I think is happening could still be happening. The other thing is I have to be willing to admit I'm wrong very, very quickly. So if I'm getting in a trade over the next few days, I'm doing so with tight stops so that if I'm wrong, I can change my mind very quickly. From the standpoint of an analyst, I will tell you this is the worst case scenario that we are opening with this morning because one contract is in balance, which is not bullish, and one contract has a massive gap up, which is bullish. So this is a confusing time. Do not feel a need to force trades this morning. Let the market work itself out. Let it deal with this contract rollover a little bit before you force your way into trades. That is my advice. Any questions on any of that from the chat? Man, the chat is like dead this morning. Good morning to Kiwi. Welcome. The demo trader in the house. Good morning to you. Trevor is here. Welcome, welcome. Kiwi says, can you take a look at Bitcoin? Bitcoin? Sure, why not? Let's do it to it. Okay, so again, I kind of have the exact same feeling about Bitcoin that I have about the stock market, not for the same reasons, but I do feel like they have not made a good low yet. I feel like, the market might get a short-term bounce, but that it's going to push up into resistance and then head back down. I'm really liking this area right here around these previous highs between 72 and 75. I think this is a good area for the market to find support. The fact that we've come so close to it and haven't tested these old levels, to me means we want that one more push to the downside. So if you're a longer term investor in Bitcoin, you could dollar cost average here, but I do think we're going to head down to the low 70s. So no reason to force your way into buying right now. If you are a shorter term Bitcoin buyer, the thing that I'm looking at right now is the channel. On the daily, right there. Okay, so you're holding the lows of this trend line up. You're getting resistance at the highs of this trend line. So that's basically what you're watching. You're saying today, can Bitcoin turn around and head back up towards the 87, 88 area? If it can, then it can absolutely keep going all the way up to 88 to 90. Okay. It can head up to that higher area. If not, if you start to break yesterday's daily low today, and we'll zoom in and get that exact level. So 81,950. If you break that to the downside, then this thing is going to have a big sell-off. Okay. So just to give you a similar idea, look at this trend line. You break it. What happens? Big pullback. Okay. I see the same thing here. You break this trend line, big pullback in price. And that will likely happen today, intraday. Either you will hold yesterday's lows or you will fail. If you hold it, you're looking to head up to the middle of the range, which, like I said, 85 to 88. If you can continue the momentum from there, you're heading up much higher. Okay. If you cannot, if you get below yesterday's low, look for a big sell-off. And as I said, that could happen today, either one of those two. Any other questions from the chat? By the way, you can leave questions if you are watching from the Discord. You can leave your questions in the Futures-Charles tab, and I will do my best to get to those. Trader says in the Discord, yes, if you watch Friday's volume, there was a huge difference, but not if you watch today's volume. It's very close. Yeah, people are rolling over. This is the rollover week. They will be rolling over. And like I said, by tomorrow, the new contract, the M contract, will have more liquidity. So some people, they like to be in whichever contract has more liquidity. That's like their thing. I don't worry about that. There's plenty of liquidity for me to fill my 3 contracts at a time on either. It doesn't matter. But it does make it tricky for analysis because they're at slightly different price levels. And so we just have to accept that. Slim in the house. What's up, bro? DNK is here. Good morning to you. Mark in the house. Hey, hey. Street Salsa says the VIX is lower again today. I don't take VIX into account in my my analysis at all. I've just never found anything that's consistent for intraday trading where you have an advantage looking at the VIX, so I don't look at it at all. But I would say VIX being down is a little more bullish because it means a little bit of the fear is out of the market. And, you know, as we discussed earlier, the market is balancing off the momentum down right now. And so the question we are asking ourselves is, are we going to continue to balance with time, or are we going to balance with price, which would be a bounce in price? And so today's market will tell us based on the gap. And that is the gap created by the new contract. Also, for what it's worth, it's no guarantee. But the last like 5 contracts where this has happened, where we've had a gap up because of a contract rollover, it has been a gap and go. The market did not come back to the old range. So that's no guarantee today, obviously, but it is just worth taking into account. Pavel in the house. Good morning to you. Tommy is here. Welcome, welcome. Jay Weave. He says, everyone is hurting from St. Patrick's Day weekend. Technically, today is St. Patty's, isn't it? But yeah, I get that. GH says, how far back of support and resistance do you look at to use? And at what time frame? So it's a great question. I believe all old levels always matter, right? So if a level was support and resistance in the past, it is likely to be support and resistance again in the future. Now, the more you pass through that level, the less it matters, right? So for example, when the market is coming down here and the market is looking for support on the way down, you know, we haven't traded in this area for like almost a year, for like 6 months, something like that. You have to go back 6 months to find the last time we traded in here. So I would go back 6 months and find where are the support and resistance levels from that time. Okay. But once we start to pass through these levels over and over again, I'm not really worried about what happened 6 months ago. I'm now saying where were the support and resistance levels over the last week, right? So the way that I keep track of that is this orange section that you see over here on the left side of the screen. That is the cumulative volume. And I basically just combined however much volume I have to combine to get back to those old levels. So if the market is up here, I just need to do the last few months. That's all I need to look back because that's the only time we've been up at this level. But if the market comes back down here, well, now I gotta do cumulative volume all the way back to here in order to see these levels, right? And if the market were to sell off even further, let's say, not that I think it's going to happen, but let's say we went down to like the 4,000s, well, then I would need to add another year's worth of data, right? I would need a lot more data. So just however far back I have to go to see where the volume traded, that's how far back I will go. And that's what you will see on the cumulative volume profile. So what I'm doing intraday as an intraday trader is I'm keeping an eye on these large nodes. Okay. The bigger the node, the more important it is. And I'm assuming that those nodes will act as support and resistance. So just looking at the two that I just circled right there, looking at this node and this node, those were there for the last 6 months. Those were the two, high volume nodes. Well, look what the market just did, right? Came into the first one, then the second one, and it balanced between the two. Do you see that? Push down into one, push back up into the other, push down into the one, push back up into the other. So that's cumulative volume. That's one thing that I look at for support and resistance levels. Then I'm paying attention to where did the market spend the most time. So if I'm looking here and I'm trying to figure out exact levels where I want to put long and shorts, give me a second. It's going to take a long time. Let me just push this over. Oh, this contract doesn't have it. Here we go. Okay. So then I'm looking back in the past and I'm saying, where did the market spend the most time? So I can see where it brought in the most volume using that volume profile. But then I'm like, where did it spend the most time during these days and over multiple days? Look where we are right now. Multiple days we spent grinding around in this range. So that is likely to act as resistance as the market pushes back up into it, right? If we're looking back in here, look at all the time that we spent in here. That's likely to be support as we come down and so on and so forth. So those are the two things that I watch for support and resistance: time and volume. All right, we got 4 minutes till the market opens. Any other questions for me? Hit me with them. Willie T in the house, good morning to you. Frito says, top of the morning to y'alls. To yas. Will, good morning to you. Duzman says, good morning. What are your thoughts on fair value gaps? So people have different terminology for fair value gaps. So if you wanted to correct me if I'm wrong here, you're more than welcome to. But the idea is just basically if you're looking at a value area, what's a change in value? Are you way above it? Are you way below it? Are you opening inside the previous day's value? And so on and so forth. Value. So for those that don't know, we're talking about the little blue box that you see on the market profile right here. Okay. Value is much harder to change than price. It's very easy for the market to push the price up and down and up and down and up and down, and then close right where it opened, right? And go nowhere throughout the day. So price doesn't matter, the price going up and down. But when the value changes, that's a sign that something is changing in the market. So for example, in the latter part of last week, we had lots of overlapping value. Overlapping. This one was lower. This one was higher. Okay. But, big picture, all the value is overlapping during the week. That is just a sign of balance. That's a sign that no one's in charge, right? When we open this morning, we will be opening way above yesterday's value. Now that is because of the contract difference. And so it's not a true gap. So I wouldn't put too much thought into it today. Any other day, though, it would be bullish to see, right? When value opens and it's way above the previous day's value, that is a sign the market has momentum. And it's probably going to keep going because we think about momentum like it's a speeding train. A train doesn't just instantly stop. So if it has momentum, that momentum is likely to keep going. But as I mentioned, this morning will be very tricky because one of the contracts is opening inside yesterday's range and the other one is opening with a gap up. So take everything with a grain of salt today. Good morning to Nap, Jay, Grizzly Bull. Sean says, good morning. When are we rolling over the contract for the ES? If you just go scroll back to the first to the first start of this video, I went over all of that in detail. You can roll over anytime you'd like. You can roll over today, tomorrow, Friday, whatever you want. It doesn't matter. No one in this room is trading with big enough size that it matters. So you can be on either contract and you're going to be fine. The only important thing is you make sure the chart you're looking at is on the correct contract because the price levels can get confusing if you're not. All right, the market is open. So the question I'm asking myself this morning is, do we really have momentum up? Okay. I'm assuming we're going sideways between 57.05 and probably this node right here around 56.60. I assume that we're just going to go up and down and up and down and up and down inside of this range. If we get above 57.05, then I'll start to get bullish that we do have momentum to the upside. Until I see that, I assume we're just going sideways. Okay. You will also see me kind of dancing back and forth between the two contracts on my Bookmap. And that is just because I'm trying to figure out which one I should be watching, which is giving me better information based on liquidity. Yeah, there's like way less liquidity showing up right now in the old contract. Okay, so we got some resistance here right at 5,700. Market loves a round number. So we will likely get some sellers waiting there around 5,700. The question we're going to ask then is, once we get resistance and we come back down, can we hold above the opening price? So if we get some resistance and we come back down and we hold that opening price, that is bullish. If we pass back through it, it's a sign that we need more chop. We need to spend more time going sideways. Let's see what happens. Sook in the house. Percy is here. Good morning to you. Mark says, I think of fair value gaps as single prints in the market profile. Oh, okay. Yeah, that's very different than I think about it. It's one of the downsides to trading. Everybody has different terms, and they don't always mean the same thing. Okay, so no resistance at all at 5,700. That's bullish to see. We're now above the overnight high. So the question is, what happens here above the overnight high? Do we bring in new buyers up here, or do we fail and pull back in? If we can bring in new buyers up here, if we can turn this area around 5,700 into support, we'll be bullish for continuation to the upside today. If not, we'll assume more chop. Okay. I would describe myself as bullish at this point. We are bringing in new buyers at the overnight high. That increases the odds that we are heading, again, this is on the newer contract, the M contract, that we are heading to 57.12, which is the high from 10.8. Now, I know that on this contract, 10.8's high was a different high, but this is where it confuses people. I use the old contract for the data from then and the new contract for the data right now. So to me, support at the overnight high takes me to test the high from 310. New buying up there gets me bullish for continuation higher. Okay, so now we're going to have the same conversation here above the high from 310 that we had at the overnight high, which is this where buyers are taking profits? Is this where the market runs out of steam and turns around and comes back down? Or do we bring in more buyers? Do we have shorts that are covering this morning? Do we have FOMO buyers that are chasing price? Can we bring in new buyers up here at this high? If we can, we look for the momentum to continue. Okay? The next resistance that I see above is around 57.36. If we can bring in the buyers here. Okay, moment of truth. If they cannot hold 57.12, they're going to pull back down to 57.04. If they can hold 57.12, we're heading up towards 57.35. Can the buyers hold it? Johnny Silver in the house. Good morning to you. Kevin is here. Arjit, welcome, welcome. Nor Auto Trading, good morning to you. Nor just signed up for Window Trader. We'll see how that turns out. Knapp says, I think most fair value gaps refer to the 3 candle strategy. I have no idea what any of that is. So, sorry, guys. Can't comment on it. I can just tell you momentum. This is all I think about. It's all I worry about is, can the market get to such a level? Okay, great. Once it gets there, what happens? Are there buyers or not? Are there sellers or not? Okay, then it's going to whatever other level based on what happens at that level. I don't really worry about anything beyond that. Getting above the overnight high made me bullish to get to the high from 310. Holding the high at 310 makes me bullish to test the resistance at 57.35. It's not rocket science. It's very simple. Where are the buyers and sellers? Are they buying or are they selling? This is the way. This is the way. Um, Alois says, not worth to think 1 second, Charles. Not worth to think 1 second. I'm not sure what you mean by that. Try to rephrase it. Doesman is writing something in the Discord. He's been writing for 2 minutes. Doesman, give it to me. There it is. He says, I consider fair value gaps to be low volume areas that could be tested during the distribution since the price has to gap away from value. I'm thinking at what time frame would have the least noise. And since price likes to test extremes of a distribution, they could be good trade locations. It depends. I would say the time frame depends on the time frame you execute trades. So if you are a scalper who's taking trades, every 5 minutes, just like boom, 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 well, then you probably want to be looking at like a 5 minute or 15 minute candle. But if you're a day trader, you probably want to be looking at hourly or 4 hour or daily. And if you're a swing trader, you definitely want to be looking at daily. That's a very ugly question mark. There we go. Okay, so what we have right now is what we call a volume cliff sitting right at 57.15, 57.15.50. Why does that catch our attention? It's one level where there's just a massive amount of volume, way more contracts traded hands than the areas around it. So like 4,700 contracts traded right there, but just a few handles lower, only 600. That is a sign of a computer creating that support right there. So it's harder to trust support that is created artificially by a computer because a lot of times they put it there so that as buyers are buying up here, that's where they put their stops, is right below that level. So that's fine. As long as we keep the momentum going, which it looks like we will, it's nothing to worry about. But if you come back through that level, you have a chance of liquidating all these buyers that are currently buying right now. So to me, this level around 57.16 is very, very important. It needs to hold if we're going to keep going up. If that breaks, we are definitely going to get a larger pullback down to the overnight high. Okay. But for the moment, the momentum is still to the upside. He's saying that the fair value gap isn't worth 1 second. Gotcha. Yeah, I don't hate on anyone's system. If it works, it works. If it doesn't, it doesn't. And traders will figure it out. To each person, I just suggest try something. If it works, use it. If it doesn't, throw it away. And the better you get as a trader, the more you will throw away. There's just no doubt about it. Every year, my analysis of markets gets simpler and simpler and simpler. I look at less and less because you begin to realize that the purest information, which is where does the market go and how much volume trades when it gets there, that tells you everything you need to know. It's not right 100% of the time, but it's right way more than it's wrong. By the way, if you are enjoying this live stream, I do this every morning in a private group called the Piratetraders Brigade. You can see a link up in the top corner of the video. Piratetraders.io/join. It's $20 a month. And for $20, I'm telling you, every day, I will give you insights about what the market is likely to do. You need less than a single point on the ES to pay for it every month. And I can be absolutely certain that at some point in a month, I will say something that will help you get in a trade to make a point or stop you from getting into a trade where you might lose a point, and the service will pay for itself. So if you're interested in learning more and you're enjoying yourself, you might consider joining the brigade. Piratetraders.io/join. Okay, so at this point, we have what we call good taper at the high. That doesn't mean this is the high of the day, but it means it could be. It just means it's a good high, not that it has to be the high. So the next question we're asking ourselves is that volume cliff that we talked about at 57.16. Can that now hold as support? If it can, no worries. The momentum to the upside will continue and we'll just turn around and keep going. If it breaks, we are likely to liquidate down towards the overnight high. So can they hold it? Okay, so we didn't hold the support. That increases the odds. We're coming back down, looking for support between 57.06 and 57.02. The market is still bullish. The higher probability is still that it is going to continue higher today. It just needs to cool off a little bit and bring in some discount shoppers. Let's see if they can hold this overnight high. It's also worth noting we still have an iceberg at the high. That is sometimes a sign that the market wants to come back and test that level once more. Jay says it's March Madness week. Generally, I don't like to get off topic, but just one quick question. Which is the best streaming app for watching the March Madness? Okay, so the halfback held as support. We're now pushing up into these highs, which have the good taper. So the question in my mind is, does 57.22 become resistance, or do we poke through? If we poke through, bullish for a move up to 57.35. Very helpful, Frito. To resist or not to resist? That is the question. We're making sweet, sweet love to this iceberg. Can it disappear? Wow, exactly 100 contracts. All right, we're through the resistance, increasing the odds. We're making the move up to 57.35. We'll be looking for sellers there. It's important to keep in mind on these rollover days that most of the liquidity that you see in the market is computers. It is either computers that are arbitraging, so they're arbitraging the stocks or the indexes for the stock market to the futures, or they're arbitraging the SPX to the futures and vice versa. And then also there's a lot of day trading bots. There's a lot of computer programs that just run all day, every day. They look for certain things that they recognize certain data sets, and then they execute trades based on those data sets. If you're a computer, today is much more confusing because you've got liquidity split on two different contracts showing things at different price levels. So there's going to be a lot fewer of those day trading bots functioning for the next couple of days, which basically just means the market is a little more free to move around, which means it'll be a little more choppy, which means it'll be a little bit more difficult. Nothing I didn't talk about in the first 5 minutes, but it's just worth keeping in mind. As I'm looking at Bookmap now, my brain is saying, this doesn't look like normal behavior. We're not like flipping the order book the way we normally would. We're not getting the sort of, bot activity that we normally would. And then I'm reminding myself, probably they just turned off those bots for the day because they're waiting for the liquidity to be fully on one contract before they turn them back on. Frito says 1,000 lot boy at 26. 1,000 lot boy. Oh boy. Bug. Yeah, that's big. That's dark. My guess is they're trying to scare price away with that liquidity. Trying to send it back down into support. But then, of course, once it finds that support, guess what it does? It comes back to poke at the liquidity. The market would love to fill 1,000 contracts at the high. All right, well, let's sum it all up. Let's tie a giant bow around it and make it all make sense as we walk away for the day. Right now, the market has momentum to the upside. That means it is likely to continue higher today. Okay? What we are looking for is a signal from the market that that momentum has come to an end. We think about momentum like it's a speeding train. A speeding train does not just instantly stop. It does not just instantly start going the opposite direction. It has to slowly come to a stop, then reverse and slowly build up steam the other way. Okay? So if we have momentum up this morning, we should assume the market is going to keep going up until it gives us those signs that it's rolling over. So the first of those signs, we should be able to come back for this high. This is what I call a low volume high, only 7 contracts traded. That is a sign that the market wants to head back up there and test that once again. So the market should be able to find support in the same place it did last time, in between 57.07 and the overnight high, 57.03, and then come back up for the high. If it does not, that's the sign that the momentum is running out. Okay? We would then look for the market to pull back down inside the overnight range. And probably spend some time kind of bouncing around inside the overnight range above the opening price. So it doesn't matter which contract you're looking at, whatever is your opening price for the new contract, it's $56.90. As long as the market stays above that, the train hasn't reversed. It hasn't started going the other way. It's just slowing down, right? But if we pass back through the opening price now, we could liquidate a lot of the buyers that are long at the, this morning. And that could cause a large pullback in price. So no matter how you're looking at the chart, whichever contract you're trading, you should be saying, I'm at least slightly bullish as long as we stay above the opening price. But what I really want to see is the overnight high hold as support. If you see that overnight high hold as support, you should assume the momentum will continue for hours. Okay? With that, I will say goodbye. Thank you very, very much for joining me. If you are new and you're enjoying what you're seeing, please consider joining the Piratetraders Brigade. We would love to have you. It's only $20. You can make that back with a single point of profit in the ES, which I'm relatively confident you'll be able to pull off at some point within a month. Thank you very much, and we will see you here next Monday. Head on over and hang out with Bruce in his stream. Members of the brigade, let's set sail.